Hey guys, welcome back to another weekend trading edge video. We're going to kick things off with the Euro Aussie, and this is going to be a follow-up on, well, the same pair as we looked at it for bullish opportunities, I think about 2 weeks ago. By the way, if you haven't done so already, make sure you subscribe to the channel. I know a lot of you guys watch this video on a weekly basis, but you actually haven't clicked that subscribe button. Do me a favor, support what we're doing here, support the free videos that I give you each and every week, the multiple ones. Hit that subscribe button. Also, that puts you in the know whenever I put out a new release. But we've had an update on the Euro Aussie here. So when we looked at it a few weeks ago, we talked about price action coming down to this previous level of consolidation. Overall, how we are still in a bullish trend, and we were looking for reversal reasons. Now, we got a nice little simple pattern or classic pattern formation setting up here. And it's going to be in the form of a head and shoulders. And a head and shoulders is a classic reversal pattern in the market. And a few things that I'm looking at here is this, right? So here's the length of our previous retracement, or excuse me, extension. And I want to compare that to the length of our most recent extension. And you can see that this extension is lower than this one. So the length of this extension is smaller. That is a sign of a trend losing momentum. We have a few other things as well. Obviously, the overall location being at a previous level of consolidation, but also how price action reacted on this extension. Although we dove down to this level right here, you can see we had a very negative bearish candle, which means it's technically a bearish candle because it is red. The close is lower than the open, right? But you can see that price action by the wick here pushed all the way down, got sucked back up, and then on the very next candle had a higher high, higher close. Not a convincing one, that was still a doji candle, which means indecision, but a higher high, higher close regardless. So after that move, what we've done is we've come back to retest really the previous outside return. If I draw this out like this, extension, outside return, extension, outside return, giving us a deep retracement. That is another clue of a slowing down trend, right? A strong trend should have longer extensions, shorter retracements. When that trend is starting to close down, we should see smaller extensions and deeper retracements. So this also can potentially form what's called a head and shoulders pattern. Typically what we see in the head and shoulders pattern is one more failed extension. So price action comes down as it did right here. We fail to extend, and we usually end somewhere around a symmetrical level of the previous extension down here. And then what confirms this is a violation of what's called the neckline. This is going to be this horizontal resistance level right here. This is also going to be a structure swap, as you see, which means price action once came to this level as support, broke through, support turned to resistance, and if we can violate this level, break and close above, that would be a very positive sign for a continuation bullish, which falls into our theme of a bullish continuation pattern overall. So a nice little update on Euro Aussie, still looking for bullish trend continuation opportunities. Let's head on to the next pair. So next we're going to head over to the NASDAQ. So not a pair, but we're going to head over to an index. But I'd like to show you technical analysis on different types of assets to show you that, hey, it works the same, right? Now, different markets do have their different personalities, and that's something that you'll discover during the testing and the journaling process. But as far as the kind of the time-tested rules of technical analysis, reading a candlestick, reading a price chart, reading trend, it's going to be the same across the board. And that's why we always say if you understand technical analysis, whether you're a technical or a fundamental trader, whether you're a trader or an investor, you could be extremely dangerous in the market. So here on the NASDAQ, we've had a few things happen, right? So our most recent move was a hold of our previous structure lows, right? This level right here was our previous low watermark. We came to that level, price action looked like it was going to break through, and we tested and held, bumped off it a little bit, right? Little double bottom type action right here. And we've held multiple times before finally ending the week with a very positive bullish candle. Now, not only is this a very positive bullish candle, and by positive I mean this, right? We have a tail to the downside, which shows us rejection. We have a close basically at the very highs, which shows us that the bulls finished the session very strongly. So not only do we have that, but if you look at the consolidation area that occurred here as this market was bouncing around testing that level of structure, we also broke and closed above this. Now this is very similar to the previous example I showed you. And again, the cool thing about technical analysis, we have these classic chart patterns, right? We can call something a head and shoulders, we can call something this, we can call something that. But how I like to teach traders is this: if you can understand what the main point, the main concept of whatever that pattern is, you'll be able to find other situations in the market that maybe aren't exactly like that pattern, but mean the same thing. So you take this example, you take the previous example, one was a head and shoulders, one is a double bottom or consolidation, whatever you want to call it. What matters most is the violation of that upward line of previous, or well, in this case, previous structure resistance. And once that is violated, whether it's a neckline or whether it's just a normal support and resistance line, that's what's the most important thing in the market. You can see that happening here on the NASDAQ. Now, we go down to a lower time frame and get a clearer view of kind of this consolidation, right? Where we kind of bounce down, bounce up, bounce up, bounce up, bounce down, but down, but down, and we finally break it. So now the next question is, where are we likely to continue next, right? This is part of that 4-step process that we use called IPDE. We identify the violation that allows us to predict that price action is likely to continue higher. Now we want to see if price action is likely to continue higher, where are we likely to continue higher to? And that's going to tell us if there's actually any meat on the bone for this trade, meaning if this is a trade that actually has room to run and make profit. And the next level that stands out for me, right, because I'm a support and resistance supply and demand trader, is going to be this zone right here, right? This previous low watermark, the outside return before that came before kind of the big move down. That is where price action is likely to go, in my opinion. Now, that's a big zone, and what I want to do is I want to see if I can kind of isolate that zone and find an area that is of more importance. And something I can do is I can bring on some volume. I'm going to bring it from the very high to the very low. And what I like to do is I like to play the voids, right? So I look at volume as being synonymous with interest. The more volume there is, the more interest there is. Typically, the more interest there is, those are going to be important points in the market. So when you see big volume spikes, these are important points, right? Here's a clue. Consolidation is typically always going to have pretty high volume. And then you have these areas right here called the void, right? Where there's not a lot of interest. And think about this as being kind of like a highway, where if this is city driving and you're stopping and going and there's lots of traffic, this is the highway. Or a Sunday morning drive to the supermarket like I did this morning, there's not a lot of traffic and you can kind of flow freely through the roads until you get to the next level. So looking at this allows you, so I'm drawing a separate one by accident, looking at this allows you to kind of isolate your zone and say, hey, you know what? Well, I'm in the void right here. Volume doesn't really pick up till right here. This can allow me to isolate my level a little bit more. So we can make our target profit and say, hey, we have room to roll up to this level. Now, something else interesting here is that we also have an advanced pattern formation, which I wasn't going to talk about, but I guess this offers another opportunity for a bearish trader. And this is going to be a butterfly pattern. I'll draw it out real quickly. We won't go through all the details of this, but a butterfly pattern is not a pattern that I personally trade, but believe it or not, it is the pattern that I understand the most out of all the harmonic patterns out there. And the butterfly pattern is an exhaustion pattern where price action, again, completes above the X leg, right? In most patterns or many patterns, the X leg is kind of like the stopping point. In a butterfly pattern, the price action completes beyond the X leg, and the play that you're trying to make is an exhaustion, right? Price action or the buyers took a lot of effort to buy it down here and push it all the way up. Eventually, when you push it up, you're going to start taking some profits. Obviously, there's going to be less buyers interested as well. And we start to see a little bit of exhaustion, a little bit of relief. And that relief typically comes in the form of a pullback. This pullback is how you make money off the butterfly pattern. So if you're a butterfly trader, this is something that's at market you can look for right now. Again, I'm not personally a fan of the butterfly pattern because of the completion in no man's land. You know how I am about structure. But again, from a psychological standpoint, I understand it. So this can certainly be a sell at market as well. Or understanding the butterfly pattern, understanding what is likely to occur after it can allow you to set yourself up for the next trade saying, hey, I know that this pattern is here. I know that there's a chance we may see some exhaustion. If we do see some exhaustion, I'm looking to buy this pullback right down here. And this is going to be my pullback trade, right? Retest of structure. and my chance to buy it up to that next level. And of course, if you guys are experienced traders, you can do both, right? You can sell it here for a butterfly. You can stop and reverse, meaning that this is a level where you take your profits out from the short and you immediately go long and trade it back up. I've done that plenty of times before, not specifically with the butterfly pattern, but other patterns. But many options here on this trade. But the one I want to talk about today is the potential pullback trade and the opportunity to continue higher to this next level of structure here on the NASDAQ. Now, I apologize if that was a little bit confusing. I try to keep things simple, but hey, if this jargon is kind of new to you and you feel overwhelmed, here's what I want you to do. We have a free 4-day online trading workshop starting October 24th. Make sure you come to that. We are going to explain how to trade from a very basic standpoint. We're going to talk about everything you need to know, how to put it together, and leave you a lot more knowledgeable than you came coming in. So make sure you save the date. You can register. There's a link in the description box below. The Cyber Trader Workshop. It's 4 days. It's online. We're going to teach you technicals. We're going to teach you trading plan, backtesting, psychology, journaling, and whatever else you guys want to hear about. 4 full days of trading education, free, online. Make sure you register. That way you can save your spot and you won't miss any updates about this upcoming workshop. We haven't done one in like 3 years, so it's going to be exciting times to say the least. Lastly, we're going to head over to silver, and this is a similar situation, right? If you catch the theme here, I'm trying to pound you in the head with kind of the same thing. That way it sticks in your mind, right? I've always known about the rule of threes, right? So you do things in threes, it's more likely to stick with you. So I'm hitting you with 3 similar types of trading ideas in hopes that you get it instead of giving you a whole bunch of random stuff. But silver here is a similar situation. I actually didn't measure out. We may have some advanced pattern information here that I should measure out, and I'll do that as well. But silver has come down and we've started consolidating right here. Now, I did think that we were going to push lower, right? But we came down. We put in basically 3 consolidation candles, create this little channel. My initial thought was a break to the downside, but we actually broke to the upside here. So we're looking for a continuation. And again, in situations like this, what we do is I bracket these areas, right? Here's the upper band of my channel. Here's the lower band of my channel. I wait for the confirmed breakout unless I have a very strong previous opinion and previous prediction. And then we take advantage of the move to come next. So just like on the NASDAQ, we have a higher high, higher close there. That's confirmation that we've broken to the upside. And now the question is, okay, well, if we're going to continue up, where are we likely to continue up to next? And well, our previous inside level of structure comes right here. You can see it a little bit higher as well. So at a minimum, that seems like a really good place to take targets. That looks like a 618 Fibonacci retracement as well, probably closer to a 50%. Let's see, Fibonacci retracement from my swing high to my swing low. Right in the middle, look at that. Looks like a 50%, maybe a 618, right in the middle, of course. And again, we can bring in some volume as well. I'll bring it from this big swing so we can capture a picture of this whole thing. And you can see that we have high volume right here in the consolidation level. And then we have this void, and you know what? Volume doesn't pick up until we get to that 618. So if you were kind of debating between, hey, should I be 618 or 50%, 618 or 50%? Volume confirms a little bit more at the 618 Fibonacci retracement level. So another situation where I know I'm boring, looking for the same thing. This is my trading style, sorry. Look for the pullback into previous structure resistance, now acting as support, and then look for a continuation move up to about 2245s. Before you go, a lot of you guys have been asking me questions about trading, and I love answering them, but here's what I want you to do, especially if I'm not around, right? Just Google search or YouTube search the Trading Coach Podcast and then enter whatever the topic it is you want, right? I've almost got 900 episodes of the Trading Coach Podcast, so we've covered plenty of trading topics. So if you're stuck and you send me a message and maybe I haven't responded yet, Google search the Trading Coach Podcast, enter the subject, backtesting, strategy development, psychology, whatever it is, and you should get a big list of topics. Again, if you don't, you can always send me a DM as well, but that Trading Coach Podcast is there for a reference guide for you, and we're still going strong, releasing 3 episodes a week, so make sure you subscribe and follow. That way you can stay up to date with what we're doing. All right, thanks for joining. Hit that like button. Remember, subscribe if you haven't done so already, and I'll see you guys next week. Until then, plan your trade, trade your plan. Take care.
As retail traders gain more and more access to data and platforms that used to only be locked behind institutional banks, as well as having incredible technology available at their fingertips, there's no denying that today there's more opportunity than ever to make vast sums of money and build wealth through trading. However, with accessibility comes great responsibility, and in the wrong hands or the uninitiated hands, it can have the reverse effect. It's never been easier to lose every penny that you've accumulated too. So at Tier 1 Trading, a company renowned for generously giving traders the truth, we're going to give you a roadmap and guidelines so that those of you who really and truly want to be successful traders can all benefit from the incredible time we live in right now. We're going to run a comprehensive free workshop over 4 days to cover everything that you need to know about making a success in your trading. So join me and the other incredible trading coaches at Tier 1 Trading by securing your space now, and we really look forward to seeing you there. This is going to be an event that will accelerate your trading beyond belief. So register your space now and we'll see you there.